What's up, guys? So something amazing just happened this week. I exited 3 of my positions within my portfolio, and the total profit is $73,000. So in this video, I want to dive deep into what kind of trades I made, which stock I invested in, how did I make $73,000, and what is that in terms of return. And we're going to go through it one by one so then you have a good understanding of how to do it. And I'll also include 3 tips when it comes to investing in the stock market. So let's get started. Okay, so the first stock we got here is actually CAE. It is a Canadian company. You can buy it in both US and Canada. And I purchased it after the coronavirus market crash. And you can see my exit trade right here. And during that time, airline was not very popular. A lot of people don't believe that airline can recover, so on and so forth. So what happened? It took a while, but then eventually the market has formed a bottom. And what's important when it comes to CAE is that I invest when it is not popular. I like to invest in stocks that are not popular. It's not momentum-driven stock. Instead, I focus on discounts. I focus on buying stocks that are at a deep discount. So at the bottom, you're going to see the calculation I got for CAE. My entry price is $14.92. Now I invested in the US version of the stock, so this is in USD. So you can go back to the charts and see where I invested. It's around May 2020, so the price is fairly okay. Now in terms of capital, I put in $42,522. So that's approximately 2,800 shares or so. And afterwards, I just held on to it because I understand CAE. I understand the business model. It provides trainings to pilots, and it's kind of like a software as a subscription, except for airlines. And I understand how their contract works, so on and so forth. So when you think about it, having such an in-depth understanding of the stock you're going to invest in is going to give you a competitive advantage. And you can see it in this case. So I held on to CAE for approximately 6 months. And below, you're going to see the profit. And it is 44% across 6 months. And I took profit earlier this week, and the price is $21.5. And the market value is $61,000. So this is a gain of $18,753. So not bad for 6 months of waiting. Now, you got to note that I didn't say 6 months of work because I actually didn't do anything. I just invested in companies that are great at a discount with proper research, and I held on to it for 6 months. That's what passive investing or semi-passive investing is all about. And if you are looking to invest in discounted stocks, then here is tip number 1. You want to invest in companies that are not popular at the moment. So when you invest, right, you want to be looking for a discount. And if everyone is looking in the same area, you're not going to find discounts. You need to go to where people are not looking. Then you're going to find discounted opportunities. So in terms of the charts, if you're familiar with the chart, or if you have taken the free chart course that I offer below, then you may be familiar with the indicators I'm using. Now in this case, you'll see that near the bottom of the chart, I have a couple of green lines. And that is actually the price I entered. And it will actually match back to the previous image I showed you where I enter into the stock. And right now, the price you see, the latest price, is the price I exited. And that's approximately $28. So not bad. I still have some position for CAE, so it's not a full exit yet. And I gotta say, I'm pretty happy with 6 months of return. Now, the question is CAE gonna go up? Well, probably. It's a great company. But am I happy with the return? Yeah, totally. I'm happy with the return. And that's what's important. Now I'm sitting in cash and I'm just waiting for the next opportunity. So on to the next stock, which is Chef Warehouse. So for this stock, I actually entered around May as well, after the coronavirus crash. And Chef Warehouse is kind of like a delivery network for restaurants in US. And it's actually a stock pick that came out of Investing Accelerator. So that's pretty amazing. Thank you for the team. And when I was investing in this stock, I actually wasn't familiar with this company initially until I start doing research over it understand a business model, understand what everyone is doing and how the market is looking at this stock and how it is being impacted. And after a careful assessment, I determined that, well, it's actually a good buy. And I got in at approximately $12. During that time, I put in around $54,000 into the stock. So it's quite a sizable amount, and I held it for approximately 6 months. So in terms of shares, that's 4,500 shares. And for this stock, the recovery is actually faster than I expected. And it jumped up shortly after the election was over. And my gain as of last week was around 75% to 71%, depending on which transaction you're looking at. So the net return on Chef Warehouse is actually 74%. And you can see down below. Now, when it comes to the value of the stock, it grew from $54,000, which is the capital I put in, to $94,970. So that is quite a significant gain. That is awesome for 6 months of waiting. And during this time, I didn't really do much. I track the stock, and I guess there are times where I was a little bit worried because it wasn't going up as fast as I wanted. And I also took a quick profit for a part of the position because it went up and I knew that it was going to hit some sort of resistance, so that I took some profit there and reinvested that capital somewhere else. But for this stock, it follows the same tip as I mentioned earlier, is that you want to look at what is unpopular. And from this investment, I made $40,000 in profit. So that is pretty good. So tip number 2, you really want to understand the strength of the business model. Now, when you're looking at a lot of restaurant stocks during the COVID time, it would go down a lot, and Chef Warehouse is one of them. But you'll also see some restaurant stocks, for example, like QSR, which is a fast food restaurant chain, will bounce back quite quickly. For Chef Warehouse, it didn't bounce back that quickly, but then I knew that it is able to survive, per se, and then still deliver value within its network to the restaurants, so on and so forth. So even though people don't notice it yet, I knew Chef Warehouse is going to be fine. And when you're analyzing Chef Warehouse's financial statements, you'll realize that management is actually very conservative. They actually have a lot of cash on hand. Their business itself is very healthy. There might be a slight dip in terms of the revenue or profit in the short term, but overall, that management is making rational, logical decisions to preserve the business as much as possible. So that's where I have confidence in them. And once you know how to do fundamental analysis in a very short amount of time, like 20 minutes or so, then you will have that confidence too, because you know exactly what you're looking for. So this is the chart for Chef Warehouse. And in this case, you can see that I entered near the bottom, somewhere between $12 to $15, depending on which position you're looking at. I averaged up a little bit in this case. So the overall profit is still $40,000. The moment it jumped up after the election, I was very happy with the return of 74% or so. So I just exited, and I'm sitting in cash at the moment to wait for the next opportunity. Now, the third and the final investment, it's a bit ridiculous, is American Express. Now, for this investment, I actually got in early November. At that time, the Q3 results were just announced, and for some odd reason, the market panicked and started selling American Express, which I know it's a great company. And at that time, I was actually looking at Visa, MasterCard, and American Express at the same time. And I was doing a side-by-side comparison from financials to business products to the chart to all the analysis that I teach in Investing Accelerator. After doing a very thorough analysis across all three companies, I realized that American Express is actually undervalued compared to MasterCard and Visa. And when you look at the financial results, the recovery from COVID, American Express is actually recovering faster than the other two companies. Whether you're looking at the earnings presentation, whether you're looking at the financials, but for some odd reason, when you look at the chart, it doesn't really add up. So that is another signal of an opportunity, and you'll learn how to do that once you figure out how to read financial statements and all the other analysis put together. So during that time, when the market is shorting American Express, I got in. And for American Express, I use stock options. So I'm not going to go into the detail of the stock options here, but it's around $25 for the option. If you don't know what an option is, don't worry. It's kind of an advanced topic. It's kind of complicated, but just treat it as a profit multiplier. And I invested that before the election happened. So the market was still a little bit, scared, worried, and the market was going down. So that's how I'm able to pick it up at a discount. And I was planning to hold it for 12 to 24 months. And surprisingly, within 1 week, it jumped up from $25 to $42.5 overnight. And it was surprising. And then after analyzing the situation, the risk and reward, I decided that, wow, what are the odds that you can make $42.5 from $25 in 1 week? So I took the profit, and that is a return of 70% in 1 week. So now for this position, I'm sitting back on cash again and waiting for the next opportunity to happen. So that's a brief summary of my most recent 3 investments. I'm a long-term investor, so right now I'm actually having quite a healthy amount of cash. So then when the next opportunity comes along, I can invest in it. So I'll keep you posted the next time I exit.